So last time we were talking about the HOAs and how they can, be found in properties that don't even know that they have them. And also, it's something important that we're going to talk today. How are we going to know that the person that is selling the house really is the owner of the house? Who is the owner of the house? Can this house be actually sold?
Yeah, for the price you want. Can they pay off the debts that are associated with the home for the price you want to give for the home?
Yeah, especially right now, that's an important topic. Because a few years ago, we kind of overpaid for homes. And if those homes want to be sold right now, can that happen?
Yeah.
I think it can. But we need to figure out how to.
So title policies. Title insurance.
Yes. So title insurance, it's something simple to understand, but difficult at the same time.
Yeah, it is. It's really weird because once you get it, and you're like, oh, that makes sense. But so most insurance, you pay, and then going forward, you have the coverage. Because you're like, oh, if anything happens in the future, I want to know. But title insurance, you pay for things that happened in the past. And the interesting thing about this is because liens can be filed against a property for payment that wasn't received. So there can be mechanics liens, there can be easements, there can be right-of-ways, notice of interest, and then trust deeds, right? Deed of trust. So
it when you hear title insurance, you think, oh, it's just kind of like a car insurance, right? You're paying it and you're making it so it will cover your vehicle. And it is, but it's not. Because like Jason was saying, it's instead of insuring for the future, it's going to insure you what happened to the property.
Before it was yours.
Before it was yours. And it's important to know, okay, what happened to the property that are selling it right now? But at the same time, it's okay, are we going to be able to buy that property because of what happened in the past?
Yeah. So there's two main policies. And this is really important. Being in the industry, it still took me a while to figure it out. So an owner's policy and a lender's policy. And by the name, it's pretty obvious what they do, but still, it took me a while to understand. So a lender's policy, just like if you buy a brand new car and you owe money on it, like if someone else has the title and you're paying off the loan, they require full coverage auto insurance. So if anything happens to their asset, because it's not yours, if anything happens to their asset, the value can be restored. So it'll go rebuilt, or if the funds will be paid to satisfy the lien holder. So the lender's policy is like full coverage auto insurance. You get that in place for the lender. And what that means is if any liens or anything gets applied against the property after the date that the lender becomes attached to that property, title insurance will make sure that the lender gets their money first. It maintains first position. So if the lender needs to foreclose, they get all their money. I get all my money. I lent you money. I get all my money back. I get it first. And then you'd think, well, if I have a lender's policy, then I'm good because we know. But the difference is an owner's policy says that your title is clear before the state. So if some guy comes up and he said, well, I did a bunch of work on that property, or I bought it and this time and here's my proof, the title company says, no. It actually belongs to this person. And they'll either pay out the claim or say why it's not valid. So owner's policy, crazy, protects the owner. Lender's policy protects the lender. And you'd like them both. Now, but you don't have to pay for them both usually.
Yeah, and one of the things that you mentioned I think is super important, especially for investors out there that are buying a home with a hard money lending, right? And they usually get about 80% of the amount of the property in order for them to purchase it, and then they need to get money to fix it, right? And those persons that lend the money to fix it, they go on a second position on those loans. And so when you're trying to sell, let's say your house went that great and you're losing money, right? Well, you have to pay the first position first, and then the second position, you're still going to owe them. So that's important to know, to figure out, and that's why it's so important to work with a title company instead of just, doing yourself or having a handshake and say, yes, the house is yours. is important to
And-
have
and-
professionals do it.
In Utah, they require it for transfer of title of a home. You'll need a title company, and so it's good to work with a good one. If you're paying cash, you both use the same title company. Pick a good one. If you're getting financing, you can actually split it between two title companies. But either way, your coverage
Yeah.
should be good.
And you have to figure out what title company you're using, because not long ago I found a person that was receiving rents from his property, and then they took him to a title company that he needed to sign some papers. He signed the papers, everything was fine, and then he figured out that he was not an owner for the house. And even though he had an interest and he had like a bunch of things there, the title company didn't catch those and sold the property to somebody else. So there's things out there that you want to be sure who's your professional, and you want to, call and figure out what are the process for that, and how to deal with that. Okay. So you were mentioning a minute ago that you don't have to pay for those. So who pays for that then?
This is really, per the Utah State Real Estate Purchase Contract, the REPSI, the way it's outlined basically is the seller will pay the owner's policy and the buyer will pay the lender's policy. Now, a lender, if you're getting a loan, will require a lender's policy, but the owner's policy is actually optional. So
you be sure to ask for the owner's policy as well, so the seller can pay it for you. And at this moment, you can also have them pay part of your policy because of closing costs being able to be negotiated. So
Yeah.
be smart, have a good agent,
yeah,
figure out the best lender,
find a home that's worth it.
and find the right title company for you.
Yeah.
So I think the next time we need to figure out is how can we improve it's not value,
The sellability.
the sellability of your house. Check it out.